week. We're seeing a pullback after the S&P 500 rebounded 40% from a 12-year low back on March 9th. So, what are the technical indicators telling us about the market, and could this pullback be the beginning of a correction? We're joined right now by Mike Hurley, Chief Investment Officer at Incline Capital. He manages the Incline Capital Long Short Fund, which is one of 100 long-short mutual funds in the world, and he comes to us from our San Francisco newsroom. Mike, good afternoon.
Well, good afternoon to you, Carol. It's great to see you again.
Well, it's great to have you back with us, and I want to jump right to the charts, because you've got a chart of the S&P 500 with breakout lines. You know, Mike, everybody's trying to kind of make sense after the pullback yesterday. We've had a tremendous bounce from March. What's going on? Are we at a bottom? Walk us through this chart here.
Well, I think over the short term, the market is in that correction that you alluded to. But so far, it looks like a mild correction and kind of a garden variety pullback after a major market bottom. As you know, we follow trends on charts. And what was really important back last year in late 07 and actually January of 08 is when the market broke that uptrend around 1400. Now, most breakouts or breakdowns get tested. And that's what you saw when the market rallied back toward that red line around 1400 in early 08. So I think the market has put a bottom in place. You've seen some very positive things happen. One of the most positive being the rally through the downtrend line around 900.
Right.
And it would be very common and normal for the market to pull back and test that breakout.
And that was the green line we just had on that chart. So you're saying we broke that trend line. That's pretty significant.
It really is. And even more significant to me as a technician, Carol, is that along those lows that you saw the market form as we went lower into November and lower still into March, is we actually saw a bullish divergence in market internals, meaning each time we went lower, we saw fewer and fewer new 52-week lows. Now, while that gives you the potential for a bottom and some of the ingredients, you really want to see the market follow through to the upside and break that downtrend line, which it did. Well, once you break a downtrend, it's very common to see it tested. And that's where I think the market's headed over the short term, is to test that downtrend line.
Mike, sit tight for a second, because we just have some breaking news coming from a Deutsche Bank research report. And they're talking about home prices, and they're saying that prices will fall 14% from the first quarter of 2009 to the bottom. They say home prices have a way to fall before a trough or hitting a trough. And they also say New York metropolitan area prices may fall 40.6% from the first quarter to that bottoming out level. So again, coming in with some information on the housing market from Deutsche Bank. Mike, I want to get back to you. So, all right, so you think we're pretty much in a bottom here, correct?
Yeah, I think we've seen the bottom for this cycle, Carol. But as you mentioned with some of those headlines, it remains to be seen how much of a bull market we really get. Will the market kind of peak out here in this 950 to 1,000 area? Could we get it back up to 1,200 maybe? And we could even go further. I personally believe this is a market probably much like the 70s, where we have really a couple years up, a couple years down, but really a broad trading range over the next 5 to 10 years.
Got it, Mike. What about interest rates? You know, we've been talking an awful lot about the rise we've seen in interest rates. You two are keeping a watch on that. We've got a chart of the 10-year Treasury yield. Let's bring it up for everybody. And this is a really long-term perspective here, Mike. You've got from 1980 to where we are today. And, I look at this chart, and the trend line says to me, we're way off, yields that we saw 20 years ago.
Well, we really are, Carol, and I think that's the key question sort of our day. Yes, interest rates are moving up and commodities are moving up as well. I know they've been pulling back recently and the dollar's been rallying a little recently, but I think earlier on your earlier segment we were talking about a head and shoulders top in the dollar, and I think that's the case. I think any rally in the dollar is probably going to see lower prices ultimately. Commodities are probably ultimately going to see higher prices, which is normal for the investment cycle. The key question of our time, however, is really, has the Fed gone too far? In your line of work, you, of course, see a very broad spectrum of opinions out there. Some folks are saying, no, the Fed got it exactly right. Other folks are saying, no, it's the end of our country as we know it, and only time will tell who's right. The point is, though, on that chart you see there is a 20-year downtrend of interest rates. And I think if interest rates do climb back above that 4.5 level on the 10-year, that really would signal a pretty significant change in trend over the very, very long term, or the secular term, and really usher in a potentially new investment environment for a lot of people, or an investment environment similar to those that people saw in the 70s.
So watch that 4.5% level, no doubt about that. Hey, you've also got some what you call actionable ideas, some charts. One involves one of those well-known financials, and I'm talking about Wells Fargo. What are you seeing? You're watching the 200-day moving average on this one, Mike.
Well, it's really a mixed bag out there right now within the stock market. There are some ideas that really look great on the charts and some that don't look so hot. Wells Fargo, JP Morgan, some of those financials really do look nice on the charts here. They've gotten back up through their 200-day moving averages. They're pulling back nicely and consolidating. The 25 area is clearly key on Wells Fargo. And I think you can argue that the federal government has really made a commitment to save the financial sector. And I think that stock is offering a very nice entry here and most likely goes higher.
All right, Mike, we're going to leave it on that note. Thanks so much for your time today. You take care.
You too, Carol. Have a great one.
You also. Mike Hurley joining us, everybody.